Are you tired of the 9 to 5 grind and looking for investments that could potentially earn you more than your full time job? Well, it's time to tune in. Today, we're revealing 6 sector ETFs that have the potential to outperform your salary. Whether you're a seasoned investor or just starting out, you won't want to miss this game changing financial insight. So, grab your notebook and get ready to explore the ETFs that could help you say goodbye to your day job. In this video, we're going to unveil the 6 powerhouse sector ETFs that are leading the market with incredible dividend yields. Imagine earning a solid $1,700 every month just from dividends. We'll guide you on exactly how much to invest to achieve this. Plus, discover an astonishing sector ETF where investing less than $40,000 could potentially cover your expenses indefinitely. But that's not all. Stick around until the end and we'll show you how to strategically combine these ETFs into a resilient portfolio that can deliver that $1,700 monthly goal with consistency. Hit that subscribe button. Your journey towards a more lucrative investment strategy starts now. Before you dive into the exciting world of sector ETFs, let's break down the basics. What they are, their mechanics, and the reasons they could be a superior investment choice. Picture a sector ETF as a collection of top performing stocks, all housed in one convenient package, focusing on a particular industry like tech or energy. Imagine you're keen on the tech scene, but can't decide on the best companies. Instead of gambling on single stocks, you can invest in a basket that is already stocked with a variety of stellar tech stocks. Trading them is a breeze, much like other stocks. These ETFs are a hit with both long-term investors and day traders, faithfully tracking an industry index with minimum errors. Some even aim to outpace their benchmarks, doubling the returns. When it comes to costs, sector ETFs often have the edge over mutual funds because they offer a slice of the industry pie, saving you the hassle of hand-picking companies. Now that you're clued in on sector ETFs, let's zoom in on the top 6 selections for this year. Each one is tailored for different levels of initial investment, and every single one is a step towards achieving that attractive monthly income of $1,700. Let's get started. Sliding into 6th spot, we've got the Invesco KBWD High Dividend Yield Financial ETF with the memorable ticker symbol KBWD. This ETF stands out as one of the most dependable options for dividend seekers, boasting a decade-long track record of delivering close to a whopping 15% in annual dividends. Although it's currently yielding a slightly lower 10.75%, it's still a heavyweight in the dividend arena compared to its peers. Curious about the investments needed to secure your rent for good? With a 10.75% yield, an input of $189,767 could generate a cool $1,700 monthly, making financial worries a thing of the past. But what's the secret sauce for KBWD's unwavering performance? It's all about the strategic picks within the financial sector. Think banks and financial institutions that don't just pay dividends, they pay big. Hence the high dividend yield in its name. This ETF doesn't just grab any financial stock. It goes after the ones with the most generous payouts. Picture it as cherry-picking the ripest, most succulent fruits from the tree. Diversifying across 40 different companies, KBWD puts extra weight on its top 10 holdings, which majorly influence its performance. These selections are deeply involved in small business lending, mortgage-backed investments, and the bread and butter of banking services. Another compelling draw for KBWD is the price trend. Unlike many investments that have climbed in cost, KBWD has seen a price dip recently, presenting what many would call a buy the dip opportunity. And as savvy investors know, lower prices can mean higher yields, sweetening the deal for those with an eye on income. Moving on, let's spotlight the Virtus Private Credit ETF, recognized by the ticker VBC. This ETF taps into the vibrant financial sector, offering a tempting dividend yield of 13.39%. To pocket a monthly income of $1,700 from VBC, an investment of approximately $152,353 would be the key. This move could yield an annual return of $20,400, neatly breaking down your target monthly income. VBC stands out by betting on alternative income sources, a strategic move when conventional bonds falter amid rising interest rates. VBC tracks the INDXX Private Credit Index, which is populated with private credit assets, a breed apart from the typical stocks and bond market. This investment includes business development companies, BDCs, and closed-end funds, which provide financing to businesses often overlooked by mainstream banks. This strategy shines as these BDCs capitalize on opportunities that arise from leveraging low-cost debt and refinancing. What makes VBC even more compelling is its stake in floating rate notes, FRNs, bonds that are less affected by interest rate volatility. So while BDCs are high yield and inherently riskier when interest rates climb, they're currently outperforming many traditional stocks. Next, at the fourth slot is the Capital Link Global FinTech Leaders ETF, or KOINN. Sporting a dividend yield of 17.69%, a $115,319 investment in KOINN could generate an annual dividend of $20,400, translating precisely into a monthly income of $1,700. KOINN is all the rage in the investment sphere for its laser focus on the tech niche, fintech or financial technology. This sector encompasses companies revolutionizing financial services through innovation. Think streamlined online banking, enhanced risk management for financial institutions, or the development of financial management software like TurboTax and QuickBooks. KOINN is unique in its approach. It doesn't limit its portfolio to traditional fintech firms. It also encompasses giants like Amazon, Oracle, and Microsoft. While not financial companies per se, they are integral to fintech by supplying the indispensable tech backbone for financial systems. Diversifying its investments, KOINN splits its focus. Part of its portfolio backs companies using fintech to bolster their existing operations, while the other part supports tech enterprises that are instrumental in establishing fintech infrastructures. However, it's crucial to note that such high dividend yields may not always maintain their stability over the long haul, and income consistency can fluctuate. Keep in mind, though, while these enticingly high dividend yields can be appealing, they often don't hold sway over the long term. This can mean potential fluctuations in your income stream. But don't worry, we've got you covered. By the end of our video, we'll reveal how you can strategically address this issue, helping to stabilize your income prospects. At number 3 on our list is the ProShares Global Listed Private Equity ETF, which goes by the ticker symbol PEX. This financial sector gem offers an outstanding dividend yield of approximately 19.72%. To net a monthly income of $1,700, you would need to invest just about $103,448. From this investment, PEX aims to generate an annual dividend of $20,400, equating to the desired $1,700 each month. PEX is unique in that it invests in private equity and business development companies, BDCs. These aren't run-of-the-mill investments, they're distinct. The companies in PEX's portfolio are engaged in private equity, meaning they invest in other companies to foster their growth. Among the companies PEX invests in, you might find recognizable names like Amazon, Oracle, and Microsoft. Although they're not strictly finance firms, their technology prowess is crucial to the financial industry. Including such players adds a layer of diversification to your portfolio, spreading out the risk and, in turn, potentially safeguarding your capital while bolstering your income. Now, in the realm of high dividend offerings, at number 2, we have the Sonic Shares Global Shipping ETF, known by the ticker symbol BOAT. This ETF dives into the international maritime shipping industry, giving investors a stake in the crucial world of sea transportation. With a staggering dividend yield of 34.5% for the current year, it stands out as a highly lucrative option. To achieve the $1,700 monthly income, an investment of just $58,900 is required, significantly less than the previous ETFs mentioned, and the first one on our list to dip below the $100,000 mark. BOAT allows investors to capitalize on the pivotal role of global trade and the economy and the potential expansion of the shipping sector. It holds a diversified basket of 50 different investments with a focus on container, deep sea, and offshore shipping, as well as dry bulk and crude oil transportation. The top 10 holdings, which make up over half of the fund's portfolio, are major players from the United States, Europe, Japan, and Hong Kong. Investing in BOAT could be seen as a bullish move, aligned with the global trade dynamics, just-in-time manufacturing, and inventory management practices. Yet, as with any high-yield investment, sustaining a 34.5% dividend yield annually can be challenging. By the end of our discussion, we'll explain how to leverage this high yield while harnessing the stability offered by the likes of KBWD ETF. Finally, at the pinnacle of our list, for sector ETFs with the highest dividend yield is the KOINN Shares China Internet and Covered Call Strategy ETF, which trades under the ticker symbol KLIT. This innovative covered call ETF has made waves among dividend investors with its impressive performance. Though a relative newcomer, KLIT boasts a current dividend yield of a staggering 58.46%. But before we calculate the investment needed for you to generate a substantial rent income, let's delve into how KLIT achieves such a high yield. The strategy here is known as covered calls. It's about earning by holding onto certain investments while simultaneously pocketing additional returns from selling options. Think of it as enjoying the benefits of an investment while also receiving a bonus on top. KLIT zeroes in on the volatile yet thrilling arena of Chinese internet firms. These companies can be quite the roller coaster in the stock market, and that's precisely what KLIT leverages, aiming to yield more for you than typical tech investments in the US or elsewhere. Now, let's crunch the numbers. With the current dividend yield of 58.46%, you'd only need to invest around $34,896 to potentially start raking in that $1,700 monthly. Yet, with great yield often comes greater risk. And KLIT is certainly not exempt from this rule. Its performance can indeed have its ups and downs, much like a theme park thrill ride. So, how does one navigate such volatility? The key lies in diversification, which you can achieve by curating a portfolio of various sector ETFs. Consider the stability of KBWD, which offers a dividend yield of 10.75% alongside VBC's solid 13.39%, KOINN's attractive 17.69%, PEX's substantial 19.72%, BOAT's impressive 34.5%, and finally, KLIT's soaring 58.46%. When these are combined and the average yield is calculated, you end up with a blended portfolio dividend yield of about 25.76%. Applying this strategy to attain a monthly income of $1,700, you would need to invest a total of $79,193 across this diversified portfolio. This approach is projected to generate an annual dividend payout of $20,400, which breaks down to your monthly income goal of $1,700. Such a diversified income stream is expected to be more stable than relying on the returns from any single ETF, enhancing the likelihood of consistently meeting your monthly financial objectives. In our video, we've explored 6 high dividend sector ETFs that have the potential to cover your living expenses and surpass your full-time income. If you're interested in further investment insight and strategies, be sure to explore our channel for more content. Thank you for tuning in.